First off, I was hoping and thinking that I might get that Lindsey Williams DVD by yesterday, Monday. And I had a little package with a DVD in it in the mail. I was like, yeah. And then I opened it. I was like, oh, never mind. It's Vizio 2013 for my job. I had it shipped to my house. Wrong DVD. So it's not yet. I don't have it yet. So they were supposed to ship out or start shipping on the 16th. You know, today's the 24th. There's God knows how many people bought the DVD, so whatever. But I'm confident we'll have it this week. We have to, and then I'll watch it, do the summary, and then give you a link to get it. But this video, Alan Greenspan, for those who don't know, former head of the Federal Reserve, just like Ben Bernanke, which he was before Ben Bernanke, and then just like Janet Yellen now. Alan Greenspan warns, this is not a shocker considering September-October time frame, the cycles, the occult things our government is involved in, or no, I shouldn't say our government, but the people who really run the government, the elite, so to speak. Alan Greenspan warns there will be a, quote, significant market event. Something big is going to happen. Oh, really? With the Federal Reserve printing trillions upon trillions of dollars to keep the economic system afloat, many investors and financial pundits have surmised that the fundamental economic problems facing the United States during the crash of 2008 have been solved. Stocks are, after all, at historic highs. And you know what happens every time that happens? They crash. But the insiders know different. And if there's any single person out there who understands U.S. monetary policy and its long-term effects on domestic and global affairs, it's former Federal Reserve Chairman Alan Greenspan. As the head of the world's most powerful central bank for nearly 2 decades, he's privy to the insider conversations and government machinations that have brought us to where we are today. Greenspan recently joined veteran resource analyst Brian London at the New Orleans Investment Conference to share some of his thoughts. According to London, the former Federal Reserve Chairman made it clear that the central bank is facing a serious problem and one that will have significant ramifications in the future. This is what we've been talking about, I've been screaming about for years, and as I've even mentioned many times, like right now, I could just look outside. My neighbor's lights are on still, front porch, cars are moving, driving, people going to work. There's no smell of doom in the air, economic, anything. I think everything's okay. I mean, my senses are telling me everything's fine. But my brain, who's done all the research and sees all these same things that I present to you, that you can go easily see, public information, says a whole lot's different than what we think, and something has to be settled later on to kind of fix these issues I'm talking about. And that's the big collapse that's coming. So we asked him where he thought the gold price will be in 5 years. And he said, quote, measurably higher. Where gold goes, silver goes. I'm throwing that part in because that's the fact. Silver goes up, gold goes up, same thing. Gold goes down, silver goes down. It always happens. And yes, silver and gold will be, according to him, going up. And in a private conversation, I asked him about the outstanding debts and that the debt load in the U.S. has gotten so great that there has to be some monetary depreciation. Specifically, he said that the area of quantitative easing, QE, and zero interest rate policies set by the Fed, we cannot exit this without some significant market event. By that, I interpret it being either a stock market crash or a prolonged recession, which would then engender another round of monetary reflation by the Fed. He thinks something big is going to happen, that we can't get out of this era of money printing without some repercussions, and pretty severe ones, and that gold will benefit from it, whatever it may be. If we are in fact staring a major market event in the face, as Alan Greenspan proposes, then wealth preservation should be a key tenet of any preparedness strategy going forward. And how do you accomplish that? You buy gold and silver, either one. Silver is the poor man's gold. It is way more attainable. This ratio, a million times I've said it, from right now, gold to silver is around 70 to 1. It should be around 16 to 1 or maybe 20 to 1, and it's not, which is going to tell you when this big thing happens, it's going to appreciate to where it needs to be. Which means you percentage-wise, silver should do phenomenally well, better than gold. And again, as I've said a million other times, you're not going to be upset if you own gold. You're going to be real happy with where the price of gold goes, but you're going to be doing backflips when you see where the price of silver goes. Greenspan himself, somewhat ironically, was a gold bug and proponent of sound money prior to his appointment as the chairman of the Fed. And though he didn't discuss it much during his tenure, he is now actively saying that we can expect to see gold markedly higher within the next 5 years. His assessment is likely based on concerns over the U.S. dollar, which will, as London notes, more than likely suffer a currency devaluation at some point in the future. So there's a little more to that article, but the key point has been made. So you have a former head of the United States Central Bank, Federal Reserve, telling you a significant market event is going to happen. So considering there's the 7-year cycle, there's the Shemitah event happening, the blood moon finale, which is a massive, very, very long cycle that never hardly ever comes around, and yet it's here now. Aside from that, it means nothing. I mean, to the average person, it's just a freaking astrological event. Who gives a crap, right? But when you are a member of the club, the elite, it has huge importance to them. Why? I don't know. And honestly, I don't really care why. What's important is they do. And it's here. And it ends in September with the Shemitah in September with a multitude of other events, the 7-year cycle in September. And sometimes these particular events happen exactly on the day of these astrological or ancient, even religious type events. The Shemitah or Shemitah, I'm not sure how you pronounce that. That's one of these events. And it is exactly at the same time as these other events coming to conclusion. So, I'm already 100% in my mind on board in my thinking that absolutely this is the year when it all goes down. So as he said, there has to be some kind of big event, either dollar devaluation or stock market collapse, etc. But if the name of the game is deflation, then stock market has to crash and dollar has to be devaluated, in my opinion. I don't think it's just going to be one of these, things where it was just the stock market, or it was just the bond market, or it was just this or that, dollar problem only. This is, again, my opinion, but I've been studying stuff for a long time, keeping up with things out there for a very long time. But my opinion is that it's going to be everything. And if the stock market crashes first and it causes all this pain on people, doesn't mean the same day or the next day, oh, but hey, we've got a breaking news from the president. He says we should devalue the dollar, and other countries think the same thing. No, that's too fast. But the main huge triggering event, I do believe, is going to be September. And if it is, in fact, that stock market that crashes massively, then it's going to be followed by pain and suffering. And then, oh, we've got this agreement with other countries. We all decided we're all in debt. We all had this problem, and this hurt everybody. We're going to they're going to use the word devalue. We're going to revalue all of our countries in the world that are in agreement with this, the value of their currency, each and every one of our own currencies. And it's all based upon assets, as Lindsey Williams said it would be when this happens, except it was supposed to already happen, the devaluation thing. Or at least the news that it was coming, and you're going to hear a speech from the government talking about it. So, don't forget the head of the IMF, Christine Lagarde, gave that weird, crazy, occult speech at the beginning of one of her speeches about cycles of seven, and seven's important, and never, ever, 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 ever have you heard anyone at any type of government or international financial institution speak like that. And yet the first thing she did was say, I just come out here and do what I'm told. So all right, let's get started. And then she goes on to talk about the 7-year cycle. Oh, you just do what you're told. Well, you're the top person of the International Monetary Fund. You're like Ben Bernanke or Janet Yellen of the top of the Federal Reserve. Except this is the international one, the IMF. What do you mean you just do what you're told? Who could possibly tell you to do something when you are a separate entity? No country owns you, right? You're this own organization, international, and you have leadership like any organization, and you are El Presidente, and you are, quote, just doing what I'm told. Huh. Miss Christine Lagarde, could you be a little more specific? Who told you what to say and told you what to do that you were referring to, if you don't mind? No. Yeah, I was just kidding. Our favorite term, I misspoke. I was just joking around. I mean, not that it matters. Again, do you need to know right now? No, not important. It's just important to know what she said, how completely absurd it was, and how unbelievably, hysterically funny it's going to be for people like me and you when all this crap happens and everyone else is standing around with their jaw hitting the floor, and you're going to tell them, oh yeah, she gave this occult speech about the 7-year cycle, and oh yeah, and also there's these blood moon things, they align, and oh, there's this thing called the Shemitah. They're going to look at you like you're some kind of moron, even though you're happy and you're like still smiling. Oh yeah, I know your 401k has been demolished and your retirement's finished. And I know I'm kind of like smiling and happy right now, but I'm not happy because it's happened to you, obviously, but I can't believe all of this happened with the absurdity that I saw this coming with. And here it is. I may have mentioned a couple of things to you, to whoever you're talking to, but couldn't dare tell the rest because it was so crazy and absurd that you would look back at me like I'm a freaking moron. Kind of a little bit like you're looking at me now, except that what happened to you, it didn't happen to me. I'm completely fine. I was able to get in contact my 401k company in 2015 before the big collapse happened, pretending I'm in the future now, like 2016 looking back. Called the 401k company that we use for work and told them, since I can't get out of my 401k because I still have a job and all that, just take my money out of the investment side of the 401k, as a term they use, park it in cash for the time being. I still contribute my daily or weekly paycheck amount to it. It will, of course, go up more because of that, but it's not being invested. But it's safe. It doesn't get hurt if the market crashes because you don't have cash sitting there that they control. And then after the dust settles, hey, 401k company, can you go ahead and put it back into the market again now that it's crashed? Sure. Now you've got the same amount of money you had when the getting was good, which is right now, sitting in cash. Now you can put it back in the market so that the market, when it completely crashes, starts to go back up again over the next 5, 10 years, whatever. You now make tons of money on your investment. But you have to know these things in order to know when to take it out. How would any normal person even know that, like, this year is probably the prime year, like, immediately to get your money out of that market somehow or another? Park it in cash, etc., and then sit on it and wait. How would the average person know? If you turn on the news, the TV, you read the newspapers, you read, the Financial Times, or any kind of normal, what you would think is a top-notch publication or news source, you would be led to believe right now, I should stay in the market. It's doing fine. Whatever these people did over the last, 6, 7 years now, 2008 crisis, I mean, yeah, we've got twice the amount of debt we had, strangely enough, but I can't really tell that it's affecting us, and the market's up doing phenomenally well. Normally, I was always told when you print money, the price of goods go up because you printed so much money, but we printed double what we had a few years back, and yet prices of things haven't really gone up. No, yes, I know there's a few things, absolutely, prices have gone up, but generally speaking, I mean, things are somewhat normal. As a matter of fact, gas prices came way down. How did that happen? Well, again, they control the price of everything. That's how this all happened. That's why some things just don't make sense. When you look at the feeler gauge, or the temperature sensor, so to speak, of, well, that should be showing red signs of flashing right now of there's a problem, yet it looks completely fine, which means the printing of money must not be affecting it like it should. That's weird. Oh, whatever. All that it means is, okay, I understand that there's a group of people that control all of this, and they too can't keep it going forever because they just keep compounding debt, and the payments have to be made on that debt, and it gets to a point where it can't be made. So no matter how much money they print or how much fudging they do, can't affect the issue that your government is only bringing in so much money from tax revenues and whatnot, and that the debt becomes a burden no matter how much money the government prints, because the government's not going to print money to pay the debt. It's going to take the money that the people, the tax base basically gives to do its daily and weekly, monthly, yearly functioning. It's budget, right? That's why we have a budget. Except, in recent times, the Federal Reserve, which isn't really a government agency, somehow is actually buying the debt. It has purchased an enormous amount of debt. And I would like to ask, with what money? Where did the Federal Reserve just get that money? Well, they just printed it. They just printed it and added it to your tax liability, basically, your liability as a taxpayer. So they realize they can't keep doing this. I mean, it will reach the point where it can't be paid, period. Regardless of what tricks they may try to pull, it can't. So before we get right to that point, we need to deal with it, right? And that dealing with it is going to be let everything collapse, revaluation, aka devaluation of the dollar against other countries. It's going to be based on the country's assets, is what we're told. And I do have a sneaky suspicion that the United States has some crazy assets, i.e. massive maybe amount of gold that we just have not been told about. And we do have it. And when it comes time to revalue and everyone's like, hey, we don't have, our currency didn't get revalued too good because we don't have a whole lot of assets here. But oh my God, the United States, how the hell did you guys pull that off? And if we did that, that still means we have a strong dollar, which is not good for what is coming in the future. We need a weak dollar because they're going to try to tell you we got to be competitive with exports and other things. So we have to kind of be on the same level playing field. So how is that going to be possible if we do have this secret stash of gold and or whatever these assets are going to be? And do the powers that be really want us to have another strong dollar? We've already played the strong dollar hand. We can't play it again. So that, to me, I've heard that, well, we got this secret storage of gold, and I don't know about that. be honest with you. But I do know one thing. Alan Greenspan knows a significant market event is coming. Hands down, and gold will be significantly higher, measurably higher over the next several years. So the only remaining question is this. If there's a huge collapse of the stock market come September, October of this year, let's say it happens spot on, is $16, $17, $18 gold and $1,200 whatever dollar silver, gold and $16, $17, $18 silver going to crash temporarily so that the club, of course, can then buy it, blood on the street prices, and then do a massive U-turn and skyrocket? I've thought about this because if you look at 2008 crisis, what happened? The prices did crash, but they allowed the prices to go up significantly first, then crash the prices. And when they crashed, they still didn't go down to, $15, $16 back then. Oh, I take that back. Temporarily, silver was, and again, silver wasn't $49, $50 at the time. It was $21 at the time and crashed down to, I think the lowest for a split second was maybe $9.60 or something cents, and then $10. Like I said, I tried to rush as fast as I could to buy some bunch of silver eagles at that price, and I did secure some at $10, whatever. But that was $21 silver. Well, today we're at $16, $17, $18 silver. If the same thing happened, except even worse, I mean, think about this. In theory, could we have $5 and $6 silver? Again, the answer is always yes, because the price goes where the powers that be want it to go. And if there are an enormous amount of derivatives contracts pushing the price of silver, which there are, and just like there is everything else, and the derivatives market's what's going to crash, along with the stock market, then that means there's going to be a massive amount of flooding of these paper contracts of silver, gold, all commodities to crash everything. And there's a potential drop in the price of silver and gold that's crazy, at least for the time being, until it immediately does a U-turn and rallies. However, is it worth risking whatever silver and or gold you have accumulated thus far to make a bet like a gambling alcoholic, whatever, gambling-aholic, casino-playing fool? Some of you may say, damn it, it did before, so why not? I'm going to try it. Or maybe I'll sell half my stuff now and try it. I got to tell you, there's probably a strong probability that could happen. But I'm going to hold on to my physical. And if it happens, that's when I unload the credit cards again. If silver were to drop to $5 and $6 an ounce, and you could have come up with $1,000, $2,000, you can have a nice hefty amount of silver by playing that right. The problem is I'm not going to sell mine to chance that. Because what if behind the scenes right now they've been unloading the silver derivatives contracts unbeknownst to most of us, and when this time comes and the derivatives crisis kicks in, the precious metals market's not that affected because there's hardly any of those contracts out there. They've gotten rid of them in the meantime, behind the scenes, so to speak. That's a possibility. However, I'm not chancing it in either case. But in the second case, my point would be, don't sell your silver. Hang on to it. Oh my God, everything crashed except for gold and silver, and now they're rising. And you're going to sit back and say, oh my God, I sold mine 4 or 5 months ago. I need to get it back now, but the price is already higher than what I paid. You're going to be sick to your stomach. It's going to hurt. So hold on to what you have now. Wait for this event. See how the event goes. Have some cash sitting on the sidelines this whole time. Start saving now for this potential event to see how it goes. And if it goes in our favor, such as prices crashing, yes, that's in your favor right now. Capitalize on it and wait, because the U-turn in pricing is going to be massive. As Alan Greenspan said, it will be measurably higher in the coming few years. Take care.